Coming up in this show, I'm going to bring you my big picture of the U.S. stock market, and there are signs of a bear market. You'll love our Level 3 special. It's a 35% discount. Take a look at that. And I'm going to bring you my analysis of the stock market. We'll see a market brief, and I'm going to show you multiple time frame analysis and the S&P 500, Nasdaq, the midi stocks, that's the mid caps, and the Dow Jones Transportation Average. And, of course, our market condition monitor, and you'll be able to see the conditions of the stock market and many important stocks.
Well, I'm going to the city and I'm gonna do a steady show. And I know all my fans wanna learn how to make some dough. I've been cruising up and down for trades each and every night. And with my iPhone reclining, I know we're gonna get it just right. I'll get inside your mind, we'll have a real good time. We're gonna trade today, we gotta trade today. Go askSlim.
If you are new to askSlim.com, get acquainted. Go up to the top of our website to the free stuff and click on the SIR light. You're going to get our information on the stock market every single day for free. On YouTube, subscribe to this channel, click the notification bell, and do like this video. Give it a thumbs up. And on X, follow us at askSlim. And remember, any questions that you may have on our content, membership information, huge offerings of education and analysis, write to Matt at askSlim.com. This is a big picture update on the stock market, and there are signs of a bear market. I know everybody is used to many years of the market coming down and then roaring right back up, but the stock market got to incredible valuations at about 207% of GDP, and that was excessive, and that was based on a ton of stimulus that came out of government spending and a period of extremely low interest rates during COVID. And I believe that that set up a period of a significant correction coming. And now there are signs of that. I'm going to show you our proprietary applications looking at longer term studies, and then we're going to be looking at longer term charts, and you're going to see where I'm getting the idea that there's a reason to believe that a major top is likely forming. That doesn't mean we won't have very good rallies in the middle of this after this decline is over with, but I think they're going to be stopped short, and then the market will run into trouble again. And I'm going to show you why as we look at our applications first. So let's take a look here as we look at the Slimulator Momentum Tracker. This is a longer term application that we have, and you can see in here it looks at an investor period, and here looking at 3 months out and longer. And I have it set into our focus list right over here so that you could see. I want you to see the particular stocks that are extremely bearish, we call them very bearish, and the ones that are still holding up that are pretty bullish. So I'm going to scroll through this slowly so you get some idea. And what you have in here is our a directional bias output right over here on our focus list. And then it gives you long-term, intermediate, and short-term, and it builds an algorithm out of this and then tells you what the overall directional bias is. In our whole list of stocks that we have in here, you can see right now that about 51% are neutral, 26% are still bullish, 23% bearish. So you can see we're pretty much in a neutral look in here when you look at that. For the overall market, however, that comes from what was a very, very bullish condition, and this is a very big deterioration that I'm showing you. So let's take a look in here. You could see Applied Materials, Toll, AMD, Micron, Microsoft, XLK, which I'm going to show you that monthly chart a little bit later, FDX, FCX, XBI for solar, XLF, the financials are now slightly bearish, and those were just driving the market on the upside. Even Newmont, under this condition of gold going up, is still slightly bearish for the long term. It is improving. However, it just shows you that an equity is an equity, even if it's tied to a commodity. And if they have to sell out equities to raise money, well, they'll even sell the commodity stocks like Newmont. You can see Google in there, slightly bearish, Caterpillar, the semiconductor stocks, and that's all of the ones that are in this group that are slightly bearish. Now remember, this is 3 to 6 month outlook, really, so this is a longer term outlook right over here. If you want to know the ones that are bullish, the ones that have been holding up, or the ones that have been rotated into, we talked about the rotation into China, we talked about the rotation into the European stocks over weeks and weeks in here. And if I switch this over to look at the very bullish ones, remember, you can see all of these situations over here, long-term, intermediate, short-term. And you have China, you have the top 50 stocks in Europe, you have GDX, which is very bullish. And you can see in there, Apple is still bullish when you look at that. McDonald's, Baba, which is a Chinese stock, Deere is holding bullish. Netflix still holding bullish for the long term, but you can see in here the short term turned negative, so it's not very bullish anymore. But there are still, a decent amount of longer term buyers in there that's showing. Starbucks, T-Mobile, that's a good look at the stocks in here that are bullish. So I wanted to give you a good idea of looking at that. So I have it set up right now, looking at this particular group, which is the focus list in here. And there are lots of focus lists that you can see in here. You can look at the individual groups when you look at that. Let's just look at the XLK really quickly. And these tech stocks, of course, are leading the way down. And you still have IBM bullish, ROP, Cisco still bullish, Apple, as we said, still bullish, VeriSign bullish still. And if you look in here at the ones that are very bearish, you can see that these semiconductor stocks and some energy stocks and solar stocks are very bearish. And these are longer term situations. So the ones that are very bearish are the ones that probably have been quite oversold and will get a bounce. And you can see these are stocks that are very, very bearish when you look in here. Synopsys, Micron, Autodesk, Microsoft. Just a look at the very, very bearish stocks that are in here. And these stocks get a rebound, they're very likely to fail. So if you're looking at stocks like that, that gives you a good sense. I'm going to take it into the mode where we're looking at, let's just look at SPY here on the monthly, and I can show you the deterioration in here. We'll take the single stock symbol of SPY, and I'm going to blow this up, and I want you to see the chart in here because you could see the deterioration. Now, it's still slightly bullish to neutral. In other words, there's still enough of that long-term buying that was in there that keeps lifting the market up, but not in very good shape. And you can see how it works in here. You go back over here just about, this is about 6 months, and you could see that it kept you bullish in here, positive, positive. The dark greens are very positive right here. And now you can see in here the deterioration that has gone on as it went to just slightly positive over here for the longer term. And this is likely pretty soon to lose this long-term strength that you have right in there, which might take some weeks yet, and then we'll get some sign that it is negative. But we've had a deterioration in here in the conditions as you went from very positive to only slightly positive to neutral that you can see right over there. So we've had this deterioration here in the SPY. If you look at something like the XLK in here, which is, of course, the tech stocks, you can see in here how very bearish that is. And if you look at the chart in here, you can see what happened there as it went from conditions that were quite positive. Let's just bring this out right over here to this positive to mixed to neutral. And look what happened right over here up near the highs. as this started to get very negative and remain very negative. And here just had a little uptick to neutral, and now we're very negative again. So the conditions of the tech stocks are just really bad, and these are the leaders and the widely held, and the reason to believe that the market is going to remain in some trouble when you look at that. I kind of want to look at some of the other proprietary indicators in there, just so that you get some sense of the things that we look at for the longer term and even for the intermediate term. So let's take a look here as we look at our equities hub right over here. This is our equities and ETF hub right here. And if you want to know what the conditions are, the individual stocks, you can see the colors in here, which gives you the cycle conditions when you look at that, and you can look at the individual stocks with our analysis in here. So this is how they're laid out in these stock grids, and you can get an idea. Let's just take a look at let's say applied materials right over there, and you can see that our charts are right over here. You can look at the daily chart, or you can look at the weekly chart or the daily chart that's in there. And this is a great way if you want to look at all of our indicators in here. But I love that this is colored, so you really get a good sense for that. Let's take a look here at our charts hub right there, and you see Apple here. You can look at the weekly, you can look at the daily. Applied materials weekly and daily, right, like that. And if you want to blow the daily up, you can do that. So you can see in here AMD, and you can see this negative cycle right in here, and the negative conditions on the weekly and daily. So you can get a good look at the stocks, all of the symbols that we have. As you could see right in here. And this is a great way to scroll through our analysis right there if you want to get a sense for these stocks that we look at. Remember, we said that Deere was a stock that was still positive. Well, look at that right over there, as that still looks positive. You can see on the daily, it's just coming down to a end of a corrective period right over here, and potentially going to turn up right in there. So a good look at how to use this, and if you want to get a look at any of our stocks in here that are interesting to you with our analysis in there, you can do so. JP Morgan as a bank stock, of course, and look at how that moved below the important cycle though right over there, and now this is a bearish stock. So we're looking for a little bit of an uptick in here, and then moving to the downside. You could see the daily with a breakdown of that level right over there, and a likely upward turn right here. Yes, we're looking for a bounce in a lot of stocks right now, but this is how you can get a great idea of our analysis in all of these stocks, and it's so easy to scroll just like this. You can do that. So that's the charts hub. It's fantastic. I want to go to the rankings indicator, because while we're looking at conditions that are extremely bearish, in my opinion, you can get a great idea for the outlook in our focus list. But the reason I wanted to come here, and this is a 3 to 6 week outlook, and you can get a good sense for the ones that are still bullish or the ones that are very bearish right there. I want to go to the OBI, because just a quick way to look at this, the stocks that are likely to bounce. And I'm just giving you a really big picture in here when you look at that. And here you can see anything that's a P1. And I'm going to scroll down. N1 negative right there. This is extreme oversold condition. So it says that Apple, even if they're bearish in the longer term, these are the ones that are likely to bounce and give you selling opportunities in here. Apple is still a decent, strong stock where the directional bias is neutral in there. But these are right over here, the ones that are very oversold, are Amazon and Boeing and CRM and Disney, Google, Goldman Sachs, Home Depot. Wow, so many of them in there. JP Morgan, Morgan Stanley, Microsoft, NVIDIA, Oracle. These are stocks that are really likely to have pretty good bounces in there. XYZ, that's Block, Tesla, UAL. I've never seen so many extreme oversolds as we have right now. SMH, XLF, XLI, XLK, XRT, SPX, NDX, RUT, heating oil, the dollar. This is incredible. Every one of these that are N1 are set up for some bounces right now. So I wanted to show you that. The OBI is a fantastic indicator. Just gives you a great idea how to set up your option bias positions. So I wanted to show you that even though I'm going to make a bearish case right now, looking at the monthly charts, I wanted you to see how there's a whole bunch of stocks in there that are likely to get a bounce. And because the ones that have been so negative, they're likely to give you very good selling opportunities. And I'm going to show you why, because we're going to move into the analysis of the stock market pretty soon. This is the market condition monitor right over here, and this is a great way that you can get a good read on individual stocks and their conditions. And I'm going to come back to that because I wanted you to see all of the applications that we have in there. So that's the start of this big picture. What I've showed you is that the conditions have really deteriorated on a lot of things on on the conditions, and they're really at an extreme right now and likely to get a bounce. But I'm going to show you when I look at the monthly charts why I think those bounces are going to fail. So I wanted to set this up that, yeah, there's likely going to be a pretty good rally coming up in here, pretty good bounce, and yeah, it's likely to fail and continue to move to the downside. And I'll show you that as we get into the monthly charts. Before I do that, everything I just showed you in those applications, you can have that on our special level 3 offer for first-time subscribers or people that upgrade. You're going to get our education, analysis, and support for swing traders and option traders and active traders, and no special software needed to get a lot of what I'm going to show you, what I just showed you in there. That's all of our applications that you can get. And this is 35% discount. That's total of $232. It's only $77.33 a month versus $119. And you can get information by going to Matt at write to Matt at askSlim.com for that. This is everything that is included in there. It includes over 1,000 videos and all of the teachings that we do, access to Discord and contact with our analysts, and everything that you see here, including everything that's level 1, 2, and 3 that you're going to get, all the applications I just showed you. Just go up right over here to the top of the web page and you will see our offer, 35% off. Click on that. It'll give you information there about this offer, and then you'll be able to sign up with a link over there if you want to do that. All of those applications I just used and showed you, I think are great. Now, let's get into the monthly charts. The reason that I'm so concerned about the market having topped, we're going to look at the monthly charts in VIX, SPX, NDX, and XLK. Yes, the full show, and those of you that are just watching this clip, on the full show coming forward here, I'm going to show you the intermediate and short-term analysis. I'm really looking at the signs of a bear market now when I look at this longer-term analysis. As I showed you on our proprietary indicators, a lot have been losing serious momentum, and a lot of stocks we look at really have deteriorated to quite negative, with potential bounces, as I showed you, that need to be sold. So let's take a look here as we switch over now and look at charts. I'm going to start out by looking at the VIX. This is a chart our members get all of the, I show them our weekly and daily all of the time, and this is the monthly. Now this goes way back, and there's just an amazing rhythm in here of volatility, and it shows you monthly. Remember, these are big pictures. So this goes all the way back to 1994, debt crisis, and the just get my pointer, the debt crisis there, long-term capital management, the 20,000 to 22 bear market, the 2008-2009 bear market, the debt ceiling crisis, the Greek debt crisis, the pandemic, all of that. It gives you all of those things, and look at the magnificent rhythm in here. This on the bottom are cycle brackets. If you're brand new, that just is a guide for us to see the rhythms in the market. And of course, each one of the upside spikes that you see are big declines in the stock market. These gray ovals tell you when you're getting into the period where the market is likely entering a long-term problem period. You can see that right over here. And of course, 2020 gave you that great big break in the stock market and that pop right there. And if I just zoom in, you can see we're in this period where periods of higher implied volatilities are likely going to be with us for months and years. There's going to be times when the stock market does okay and implied volatilities come down, but we saw it begin to get elevated in here and warned that we were in a time frame where the stock market could correct. And now we see, of course, the stock market falling, implied volatilities going up. Why do implied volatilities go up? It's because there's a demand for puts. People need to buy puts either because they were short puts or because they want to hedge portfolios or they're speculating. Any of the reasons is the reason they buy puts. So as the demand for puts go up, so does implied volatility. And or the inverse of that. It's kind of a chicken egg thing. And then you get these higher periods of volatility. We're very likely to be in an extended period of high volatility. So now what I want to look at in here are several other charts. We're going to look at the SPX, the NDX, and the XLK, just so you get an idea in here. Because XLK, because this is the tech stocks that are so heavily weighted in the market, and they drove the market up as it got to insane valuations, and now they're giving up huge amounts in here, and there is some trouble. So let's look at SPX. This is the monthly cyclical chart, and you can see in here, this was the breakdown in here into 2022. It was 27.5% right there, and you could see the cyclical rhythms that are in here. So this low right over here is a little shifted off of that low. This is spot on right over there. And if you look over here, you can see those lows are pretty much spot on. Each of those stars tells you how many cycle rhythms, in other words, which money flow is coming into that time period. When you see three of them, it designates that the intermediate term holders, the longer term holders, and the monthly holders, the ones that are like investors, they all began to liquidate in here. And when they were done, it began to move up. That was 2016. You could see the same thing that happened right in here. Now you see that green oval right over there. Let me just come in a little closer right over here. This is our reversal scout. This is our monthly reversal scout, which is magnificent. You can see in here where it first turned down in early 2022, it warned you that the selling was coming into the market, into these three lows right over here, and then the market got sold off 27%. Once it was over with and the reversal scout turned up, that told us, well, we're in this period of all three of these categories of holders or traders having positive money flow conditions. In other words, they're putting money in the market right over here. Look what just happened this month. Our reversal scout turned down, and that's telling us that this declining period is a problem. If our members saw my year-end analysis, and that was telling them that I felt that the high in the market was going to be somewhere around 6175, 6200 for this year. I think the high of the year is in right now. And as this turned over and this bear market period in here, or correction, because what we said was that the period of risk was early 25 through mid 26, and that's this right in here. And because this turned over, it tells us there's a high probability that this is a period where we're going to get selling overall in the market into somewhere around mid 26, give or take a few months. So it's, first quarter to third quarter of 2026. And this downturn here is a warning. Now we have a repair level right over here. So if the market got over this level right there, we'll call it around 60.15 and closed up there, that would warn us that the negative analysis had changed. But that's, some 400 points, which isn't all that much when you think of it in terms of the S&P. So that's our warning level, and that would tell us that the market had digested it and corrected and turned more positive. I make that a low probability, but still we want to talk about it because we could always be wrong. Right now, I'm showing the warnings that says that the period of risk has started and that rallies that come out over here are likely to be sold and then come down again. This level right over here is for around 48.15. This level right over here is around 51.30. In the S&P 500, those are our targets right now for the S&P 500 into mid-2026, as long as this level here is not taken out, which I think it's, again, a low probability. If you look at the NDX over here, you can see the same thing. Let me just get that analysis up here. And there is the monthly analysis there. And you could see the reversal scout as it turned up right over there, turned down right over there, and the same thing over here. It's turned down. We've gotten a bigger decline now in the Nasdaq than we had in the other indexes. And right now, for this period of mid-2026, the target is around 17,700 to 16,300. That's where those support levels are. We're coming into an area of minor supports right now. And if you watch the full show, then you will see that there is a likely bounce coming in the stock market. And I just showed you all of the oversold stocks for that bounce. And then after that, the market is going to have some risk into June this year. And I'll show you that if you look in the show later on. This is just what I want to show right now is the monthly chart. So you could see how where there's danger in here, where this reversal scout turns down. You have that big decline off of the shooting star, these high waves or candles that you see right over there, wicks that you might call them, where selling was coming in that level. And the repair level here on this is around, we'll call it 21,570 or 21,600 in that area. If it could get back over there, then the negative scenario will not be in existence anymore. It will be better. And probably the reversal scout would turn back up, but that's a low probability for that to happen. So that's another reason we believe it. Now, the market leaders, of course, as we look at the XLK, you can see that right over here, and you have the exact same thing going on in the XLK, where you have that downturn, as you see right over there, the downturn there, and that's pretty much the message that you get. This says here that the cycles point out, of course, into 2026, and maybe there's a bigger bear market out over there into 2029 or 2030. But that's a little too far to look out. Let's just right now just say we are getting some serious warnings in here. And you can see again these wicks or high waves right in there, and this warning that the market is going to have a very hard time going forward as you have that downward turn in those charts. So I wanted to show you all of that information as you see that there are very negative signs that we're seeing in here. You see where that could be improved if you get above certain levels, but you could see the amount of selling that's going in right now. And the market is pricing in a much lower earnings for stocks due on a period of austerity that this government is putting this economy into. Whether you believe it's right or wrong, it is happening. And the government is being made smaller. Spending right now is not coming down yet, but it most likely will. And those things that supported the economy and supported these stock prices were essentially pumped up. And now there's some normalization that is going to go on. And the likelihood is that the stock market has entered a period where it's going to have a lot of problems, and that the declining sectors that we're seeing right now are where it's in the big declines are in the tech stocks, with some really giving up huge gains, 30 or 40 or 50%. That's likely to spread into the rest of the list later on, but right now we're just going to look for a bounce and a selling opportunity because there are signs of a bear market. This is the stock market analysis. We're going to look at projections on the S&P 500, but first, this important information. Please do read this slide. It tells you about our approach to analysis in the market and about you using the information that we provide and the important aspect of trade ownership. You must own your own trades, no matter what anybody says to you. Well, for the stock market this week, indexes sold off hard. They were down just about 2% to 2.5% after Friday morning's bounce. And Monday was the worst day. It just gapped down huge. Recession fears are growing. S&Ps were down over 200 points at the worst level. The Dow down over 1,100 points. They only recovered a little bit off of those lows. And those recession fears, well, that's what happens with government austerity. And that's what we're looking at as what was a big pump in the economy, a big pump in the stock market since the COVID situation. Now with the government being pulled back in size, well, all of that is going to be gone, and the stock market is going to have to go through a corrective reset in here, and we think that is what's starting. Inflation numbers, they were below estimates. Remember, anything that's going on with tariffs are not in those numbers yet. We had a good CPI. The stock market tried to soar on the upside. On that news was up 80 points for the S&Ps, and that failed. And the PPI was better also than expected, and not even much of an upside try right there. S&P 500 hit the 10% correction numbers on the downside, while the Nasdaq worse as it had fallen down as much as 13.8% from its peak. XLK, that's the ETF on the tech stocks, that was down 15% from its peak. And if you look at just the semiconductor stocks, the SMH down 22% from its peak. So some of the techs are already in bear markets. And if you look at a lot of the tech stocks, they're down 30, 40, some as much as 50%. On some just incredible downside moves after getting incredibly overpriced. Gold surges, and that continues, up about $90 on the week. It had a high of $3,017, and our members can see where our next target is on the upside because we put those updates in there for members. Silver also a solid gain, up 5.4%. That's what moved the markets this week here on March 14th, with this report right now coming at around midday on Friday. So we're going to look at the stock market here. We're going to look at intermediate and short-term charts. We'll look at the Dow Jones Transportation Average. I think that's an important one to look at. And I can give a good lesson on cycle analysis on that on those charts. So I'm going to do that. S&P 500, Nasdaq, we'll look at the mid-caps in there, the MDY. And that's multiple time frame analysis with our cycle analysis on there. And we'll look also at our level 4 indicators and our market condition monitor, which is just an amazing application. And that is available with our level 3 special that we're offering this week. So you can look at the that promo that we have in there for how to sign up for that at that big discount. So let's take a look here as we look at the stock market. So I'm going to switch over right now and look at the chart on the DJT. That's Dow Jones Transportation Average. And we're looking at weekly here. We're looking at daily, and I have a 2-hour chart on there also. So let's take a look as I look at these charts. So we'll blow up the weekly here, and I'm going to give a little lesson on cycle analysis in here. And it's kind of a busy chart. You know, some people look at our charts and say, wow, there's too much on there. But once you really get to understand what we do, this will really feel like fantastic information for you. So what I want to show you in here, first on the bottom, are cycle brackets. That's a drawing tool, and that just helps us as a guide to see the cyclical rhythms in the market. Money flows is what that is, and the longer the duration of a cycle, in this case, we'll just call that an intermediate right there and a minor cycle, and each one of these are harmonic family. Each one of these are really longer holding periods when you look at that. So we'll take a look and see the rhythms in the market. You can see this upward movement in here as the cycle and money flows give you higher highs and higher peaks, higher troughs, in there, and then once it starts to break that cycle level like right in here and fail, that's what makes a head and shoulders top. And you see that head and shoulders in there that made that peak, and we actually have a little one going on right over here right now. So what's important is looking at what we call translations and configurations. The translation in here is very positive, the configuration being that higher peaks and higher bottoms. Translation meaning where does the peak come in the actual cycle. As you can see there, this was about halfway through, and it rallied and gave up the full amount there, so that's probably what looks most like an ideal cycle shape. But then when a cycle breaks the important low right over here, it sets up a bearish condition into the cycle trough. As you see, bullish cycle, neutral cycle, bullish cycle, bullish cycle, all of those as we're looking back in here all the way into 2020. So you can see the beautiful repeating patterns that we have in here. Let's look at where we are right now. So the first thing is that you can see that yellow ovals and green ovals. This is where the rising phases start, and help comes from our reversal scout when it turns up here and turns up here and turns up here. It tells you we're in the rising phase of those cycles, and when it turns over into these corrective periods, those are those yellow ovals right over there, and tells you that's a corrective period. So you can see this positive cycle right over here as it made a new high and then came down. Now, when the next rising phase fails here, this was about a little over halfway back up, then what you see is that it sets up some risk. And once it breaks this support level right over there, the last cycle, it tells us that there's a decline going on that is likely to continue until the bottoming time period over here. Now, if I look at the dominant cycle here, that tells me that bottoms right around the beginning of August. This next one over here around the beginning of right around late July. So late July to August is where this is. And this minor one over here bottoms sometime in April or May right there. We're looking for actually the stock market to decline into May or June. So that makes sense to me when I look at that. So this is a very negative condition in here. And it says that rallies in here are likely to fail, and that while there's a minor bottom in here sometime April or May, that rally would come and then it would likely fail again and fall out into the July-August period. So this is a very, very bad picture. Momentum in here is negative, and the cycle patterns, as you can see, incredibly consistent when you look at that. And what that tells me is that there is trouble for not only the transportation stocks, but it's an indication of problems for the U.S. economy. If you want to get our information on cycle analysis, go to askSlim.com to the workshops tab on the top. There's free videos and free information there, so you'll be able to learn more about this style of analysis. Let's look at the daily chart now. And you can see in here on the daily chart, while we are looking for the market to be in bad shape, right now we're in this bottoming time window right over here. And the market not really able to get an uptick here with the stock market, which is trying to rally here on Friday. But this is where we would expect the bottoming to begin. On the right over here, you can see where the momentum resumed to the downside right there. I'll just get this in a little bit tighter. And this in the bottom here is known as the slim ribbon PO. That is an indicator that's for level 4 members. And you can see when it was green and positive, giving you upside momentum signals, the value of that. And right over here, it gave you a downside momentum signal, and it's still red and negative, reflection of the slim ribbon that's right in here. And the bottom warning in here, this is our option bias indicator. You can see in here where it was orange and giving you top warnings and how good that was. So now you're getting the bottom warning. This is an indicator that tells you momentum. So keep your options biased on the short side, as you see right over here, and it gave you a little whipsaw right there where it told you, well, you could look at the long side here, but that didn't last long, and it immediately got negative again. But now it is oversold and telling you it's likely going to give you a bounce in here. It may only be a few days. And if I look at this harmonic right in here, remember I said out to April, May? Well, that says that joining the weekly chart, that this rally is likely to fail in resistance. Once I have an anchor point here, I'll put the resistances in and then begin moving down again. So this is pretty much in alignment with the overall stock market picture I'm going to show you. And this is just entering this bottoming window right in here well, it actually entered it a while ago, but it's hasn't given any signal. And the first signal would come from the 2 hour. So this is the 2 hour, and you could see the slim ribbon negative in here. Look at these. If you were a trader in here and you said, I need a directional bias, I need to know how to make my short-term directional decisions, the slim ribbon PO on the 2 hour chart is phenomenal, as you see right over here, giving you each of these negative, first of all, it's red, which is negative, and each of these downside resumption momentum signals telling you negative. Until this turns green, you don't really have a sign of a bottom going on in there. So the Dow Jones Transportation Average overall is giving you intermediate, very negative signals, short-term negative momentum, but in a bottoming window, and the 2 hour not giving you the signal yet, but that will be the first one to give you the signal that the market is bottoming. So I wanted to show you this very negative condition in the Dow Jones Transportation Average. Let's take a look at SPX, which is the S&P 500, and we'll break it down the same way. So again, I'm looking at the weekly, the daily, and the 2 hour. The 2 hour, on this one I have a lot more information, so it's really interesting. You can see in here, as we look at the S&P 500, let's just look at these last 3 cycles. Now you can see in there, this went from a very bullishly configured cycle to another very bullishly configured cycle. Translation's amazing, where you only had peaks with 3 weeks left to go in the cycle from very minor corrections. And this one here rallied to a new high. Our target for the upside for the year was 61.75 to 6,200. It got up to 61.47. And I am saying, if you look at the analysis I did earlier in the show, which gives you a big picture of the stock market with the longer term charts. And please, if you're watching a clip, go back and watch the whole show and watch that. There are indications that the stock market has come to a major peak. And that might even be the high for the year. Now, lots of people that think there still has to be a blow-off top will argue with me. I'll tell you, we've seen a blow-off top when you get to 207% of GDP. What would a blow-off top look like? Everybody's looking for that. I don't think you're going to get it. I think you had it already. Now, there's a period out over here in June where this bottom should be forming and then begin to move up again. If there is going to be a good upside spike in the market, it's probably there. Right now, I'm going to show you on the short-term chart, we're likely to get a bounce, but you see all of this time frame in here? This takes you out to May or June before this downside is over with right there. Momentum in here, it turns negative there, so you have negative momentum there. These are confluence of support. So in other words, the 61.8 here to here, that's measured from this trough to this trough, because not exactly sure where that support zone is going to be. So we give it kind of a wide numbers in there. And these are the important 78.6s right there. These are the monthly supports there. And we're anticipating that this decline in here, at a best case, is down to about 5,400 in the May-June period, potentially down here to 5,100 in the S&P 500. So rallies in here are very likely to fail and begin to move down again. So we have that negative momentum, negative cycle as it broke this level right over here, that important level, that we had put in here a while ago, and this downturn in momentum. That's bad. So here we are looking at the cycle patterns in here. For those of you that are students of cycle analysis, this is a phenomenally interesting, because cycles overlap each other. Consider, looking at, the ripples of waves when you're standing at the shore of the ocean, and you see the movement coming in. Depending on the energies, each of the ripples have a different size. And that's what this is. This is like the ripples, the energetic ripples of the ocean, or it's like music because you have minor thirds, as you can see right in here, and the dominant cycle. This dominant green is actually the mid caps, and I'm going to show you that in a moment. We targeted this time frame quite a while ago as how long this declining period would last. So we are now in that bottoming period right over there. Again, we have the option bias indicator giving a bottom warning. This is extremely oversold. And if you watch that piece that I did earlier in the show, I show you all of the stocks that are the widely held, that are in this condition, that are very likely to get decent sized bounces on the upside. So it's important to go watch that part of the whole show that I did this week. Here is the support levels right over there. 55.08 is where that is. And you can see we got almost right down to that. This is that monthly support that I showed on the weekly, and here is another support over here, 54.03. This rally that we have today could fail, and it could go down and make a lower low, or it could begin the bottoming process in here, and that would be told to us by the 2-hour chart. So let's take over here and look at the 2-hour chart. This is such an interesting chart because what it has is the dominant cycle right in here, and the minor thirds that are right there. And you could see a minor third here, a minor third here, and a very weakly translated minor third right over there, which basically got up into that little resistance area and then sold off. What you can see in here, I'm just going to add some more bars on the right so you can get an idea of that timing window. I'm just going to put that in there. And you can see in here that we're coming up to this on the 2-hour chart, the bottoming period right in here. Again, we don't know if it's ready to bottom yet. And this is a great look at how you look at the minor cycle within the dominant cycle. So here is your dominant cycle right in here. Here are the minor cycles that live within the dominant cycle, and both of them getting to a period where they will soon turn upward in here for that bounce that we're looking for, that oversold bounce. Here you could see this is our market condition indicator on the bottom, and once, when it's up here in this green area, the market's in really good shape. Here it tests the swing zone, as we call it, between 25 and minus 25, and once it really breaks it, then you're in negative conditions right there. So you can see in here, look at the slim ribbon PO right here. Each of these telling you stay on the short side if you're a short side trader. Now, 2-hour chart is very valuable for intraday or short side traders that may trade swing trades for a few days, because this tells you about your directional decisions. Once this turns green in here and tells you this bottoming is going on, then you can start to talk about trading on the long side in a very small way, because again, you're fighting against negative conditions that exist in the daily and in the weekly. Summarizing that, weekly negative momentum declines likely out into May, June. Daily negative momentum, but getting into a bottoming phase that is unproven. And here on the 2-hour chart, still in this downward trend that you see right there under negative conditions. This needs to be the first one to turn green to tell you that the market conditions are changing. A bounce like we have today of the stock market up 75 points on the S&Ps, you could see where that is right here. It's minuscule. It's meaningless. It doesn't mean a bottom is in. It just means to us that it's trying again to get a bounce. It's going to take some work in here to be able to get an upside move. And when that happens, this is the zone that it's likely to get up to. So we'd be looking for a bounce. If we don't make a lower low, this is about 57.50 to about 58.25. So that would be kind of where these gray upside arrows will be. That'll be completed and a target up here once we get a low. The reason that they're gray now and only little arrows like this is because we're in this bottoming area, but we don't know if the bottom is in. We just want to let you know that that's coming, but that's why it's gray. What's happening here is in red and really tells you the condition. So we have this really figured out in here, how to have the proper messaging for our members, and I'm sharing that with everybody right now so you get a good idea of what we do. Let's take a look at the Nasdaq, the NDX. And the story is pretty much the same. Negative momentum, breakdown right in here, gets into the 61.8% and gives you this bounce in here. The daily is going to show you a likely bounce right in here that we're going to get once this bottom is set. And again, these declines go out into the May-June period. The most optimistic is probably right over here, 18,100 to 17,800, with a potential of getting down to this level right over here at 16.3. That's somewhere out into the May-June time frame. Again, this is a very negative setup. Cycle is broken. Momentum is on the downside. That means that rallies on the short term are likely to fail. This is an intermediate term chart that you can see right there. Here is the daily chart right here. Let me just go back, and you can see again, on just like we said on the S&P 500, this gets into the supports from the weekly here. There is likely to be a bottoming in here, but momentum very negative. And again, this gray arrows are telling you bounces from this area. Excuse me, and were that to happen without making a lower low, then the bounce target would be like 20,300 to 20,700 in that area, but then we would expect it to roll over and move down again into that May period or June, as we see here. Again, this is the MDY cycle, which has really been a dominant force in here. We're getting a lot of messages for that, and the minor thirds and minor halves, how they line up. Look how the minor half made its low here, made its low here, syncing up with the other cycles, made its low right over here, and that's coming up right over here. So this rally is likely to come. Bottom warning in here. It's extremely oversold right now, so likely to get a bounce, but it could be a very choppy bounce. Let's take a look here at the 2-hour chart. You can see in here it's been in this downtrend through the point in here where the reversal scalp turned over. That's the red dot that I'm illustrating right there. And the look at this, the MCI turns negative, the market condition indicator giving you these negative readings. The momentum resumption signals are these red arrows, and when it's red, the slim ribbon is red. This is just incredibly good information. This is still red, and if anything, this will turn over and give you another downside arrow. We hope not, and we hope what happens if it does that, then it won't make a lower low and then move up through this downtrend line and turn green. That will be the signal that the stock market is ready to move up. One more chart I want to show you is the MDY, because I've been using that as a guide because it's been so powerful in here. And you can see in here the MDY on the weekly chart is looking like it's going to make a bottom a little bit sooner than the stock market. So it could make the bottom right over here, or it could make the bottom a little bit further out if there's another cycle on the daily chart that takes you somewhere out over here. We don't know for sure how that's going to come up, but because the stock market overall looks like it's going to go down into the May-June period, I have doubts that the first low is going to be the important low. It's likely going to be the second low. How does that time out on the daily chart? Remember here, we have the breakdown here to negative momentum. We get below this low. All of that is negative. So how does it look on the daily chart? Well, that next cycle right there comes out to May 10th. So I go back to the daily chart, and this arrow right over here really needs to point somewhere right out over here. So that means these cycles could be potentially widening. We're going to look at both of those potential lows. The first one coming up right now with the rest of the stock market, with the momentum, of course, negative. Bottom warnings coming in here. We had 6 of them as the market has continued to churn its way down. It's tried to rally. It hasn't been able to yet, and you're not really getting an uptick today. I mean, this is a very small uptick. It's 8 points in the index, so not in great shape looking at that yet. And 2-hour chart, you can see the same information, really super negative, and the likelihood that we're going to get to a bottom soon, but unless this turns green, it's not really going to be important. What will be interesting is that this will turn green, probably start to move up. Our market condition indicator on the bottom, which is at -100, which is as bad as it gets, tells you that doesn't give you overbought or oversold. That just tells you the conditions are bad and that there is longer term selling going on when it gets down to that -100 area. So that's a really bad sign. So that's the MIDI, and that's telling you breakdown over here, bottom coming now, and then again out in sometime in May. And this one may bottom ahead of the rest of the stock market. That is a possibility. And overall, not great conditions. So that's a look at the charts I wanted to show you. Now we're going to look at our MCM, which I think is very telling when we look at that, and I think it's great information. Let's take a look at first our special. Talked about this in depth earlier in the show. If you want to see the vast majority of the content that we provide, it's in level 3. Fantastic information. It's 35% off right now. It only comes out to $77.33 a month for the 3-month period, $232 total, and that you save from $119 a month. So a great deal. Write to Matt at askSlim.com if you have any questions on that, or go to the top of our website and click that area right there where it says special offer, save 35%. All the information is there, and a sign up link if you choose to take advantage of that discount. All right, let's take a look at our market condition monitor, the MCM. This is a fantastic application for level 3 and level 4 members. So this is included. You can essentially dial in the style of trader you are or the time frame that you want to look at. So here I'm looking at short term, and I'm just going to look at the 4 indexes right there, and you can see that SPY, QQQ, IWM, the Dow Jones, DIA, there's bearish or very bearish in there. And these, on the short term, you can see these down arrows, which means the last change, like in QQQ or IWM, went from down to very bearish from bearish. And this went from slightly bearish to bearish. So these readings in here are just very negative. Like I said, it's going to take some work to change these. Once this short term right over here goes green, right there, you will then be starting to see some changes in here. But the rally that we're seeing so far today is not enough to do it. Let's take a look here at the intermediate, and you can see what we're looking at is they're slightly bearish to bearish is what we're looking at. And the reason for that is because the longer term indicators are still holding up, but they're going to change in here pretty soon, and that will downgrade these again. But we'll see how we do on the short term coming up. If you're an intermediate, if you're a near-term trader, which is just for a few days, you can see in here that the rally today has started to neutralize things in there, but that's only for those people that are swing traders for a few days. And intraday is only available to level 4 members in there, which gives you down to the 3-minute chart. So let's take a look at the short-term conditions right now. And you can see the setup conditions, and we'll take a look at the stocks that are in the best and the worst shape. I think that's important to look at right now. So here are the stocks that are very bullish, and you can see in here RTX, gold, PAS, which is a silver stock, China, Chinese stock BDU, and of course gold miners, the junior miners. Those are the ones that are very bullish and have been giving you very strong readings. By the way, when something changes, it goes into the change log right there. So you can see that silver is very bullish, SIL, SILV, copper is bullish, and those are the ones that have been doing well. Of course, China and the gold stocks are the ones that really have been doing well in this market. Now, when I look at the very bearish ones, I'm just going to scroll down here and you get an idea of those also. So the ones that are very bearish in here, KRE, the banks, Taiwan Semiconductor, AMD, XOP, XLE, that's the energies, Amazon, EWC, IGV, PayPal, CRM, India, the OIH, which is the drillers, EWT for solar, VLO, ITB, soybeans, TAN, which is the solar stocks, XHB, Lowe's, MGM, XRT, it just goes on and on, IR, QM. And you can see in here the dates that they turned very bearish, from bearish. They went from bearish to very bearish is what's in there. And of course, you really want to have this application. It really helps you. And if you want to know which ones are changing, you just click the notify right over here. You pick it and you download our app it's a desktop app that will notify you when these things change. That's really important. So I wanted to show you the bullish and the bearish in there, and seeing the stock market also, you get a good idea as to where we are right now, short term and intermediate term right there. If you're you can choose your trader type right over here, or time frames. So this is time frames, and here you can choose 2 hour or monthly, weekly, daily. And this is just a phenomenal application, which I really encourage you to get by signing up for our level 3 special. That's everything I want to show you today. Make sure that you go to askSlim.com, get acquainted, get our SIR Lite free information on the stock market every day by going to the free stuff up at the top of askSlim.com. On YouTube, subscribe to the channel, click the notification bell, and do like this video. Give it a thumbs up. On X, follow us at askSlim, and any questions, write to Matt at askSlim.com. I want you to be so careful. It's so crazy out there. And I'm always wishing you great trading.
Well, I'm going to sit